Good afternoon. Today is Thursday. I wish it's actually Tuesday, and it's August, 12th, and feels as if the market's getting thinner and just a little bit, I guess less opportunities, or just maybe the spot that we're in. We're just in a very tricky spot. Yeah, you have a move off the lows like we saw on Friday, and then resistance was pretty much rejected by the bears yesterday, but then today the market held in there, didn't fall apart, and it could be the start of some kind of mid-tier flag, and the question is how many days before maybe resolving one way or another, and is it a false sense of security, or are we holding higher to then get back on track? Because still the jury's out. I think you talk to 60% of the people, they probably say we're going to make new lows, and 40% think that was the normal 4.5% correction that we've typically seen over the last 2 years. So to me, I don't really know. All I know is that today the trading wasn't great. I was excited. I came in with multiple positions. I came in with Apple and Twitter and Facebook. I thought today was the day for Twitter, and Facebook could be good too. And then ICPT wound up gapping up and closed basically on the lows, and just whatever. I'm going to get into the charts because I'm in a bad mood. With that said, here is what the spiders look like. This was the break, right? Here was your break of the spiders right around the 21 day, which was right there. Remember this little spot? Boom, boom, boom. Here was when it sliced through what was that, 1952-ish area, and this was your move to the lows, and this was that great day. Remember that Thursday night we were at 1890, exactly where we all wanted to buy them, but they didn't give it to you. So here was your day and a half move. And then what happened today? Today we had a bit of a doji. So with that being said, I don't think you could be super bearish or super bullish. What you do have is you have a flag here. What happened also, if you want to go with your retracements, from just say this low to right here, if you want to be really specific, okay, we pulled in exactly about 50% off of this low to the high on Monday. So that shows some commitment to it. Okay, we could have went a little bit lower. Okay, actually no, 1925 is where I wanted to go. That was the 50%. It held right around the 38.2%, so it's showing some strength. So with that being said, according to Fib, it's hanging in there. Question is, do you get another day or two of this sideways action, and then perhaps it tries to resolve to the upside, and then you got to deal with the 21-day again, and then you got to deal with the 50-day again, and all that resistance? Or is it a false sense of security for lower prices? So sometimes, when you look at something like this, you try and get some clues from other sectors. And if you look around, not that many clues, except for you do have the Qs, and the Qs did the same kind of thing, right? Here was the lower area. That was your Friday into Monday, and then it did hold the upper end. So there's two schools out there right now. Okay, there's a school out there that's talking, again, remember last time, the big head and shoulders pattern, the left shoulder, the head, the right shoulder. This is when we were saying it could happen, and it didn't. Okay, wound up making higher lows in a descending channel and continued. Well, now there's talk again that perhaps this is a bit of an upper head and shoulders pattern, with the left shoulder, the head, and then this being the right shoulder, which I think it's very early to call, but a lot of bears just reach anyway. So at this point, I don't truly know. All I know is that this is your low. This is 94.93. The more we hold above 94.93, the more constructive, I guess, it is for technology, which is stronger, which is above the 21-day, above the 8-day now, held the 50-day. And then at some point, perhaps, it could clear this. And then all those people trying to cheat short for that head and shoulders pattern probably get squeezed, and that comes in around 95.76. And then you see what's next. You look at the Russell. What kind of clues there? Not a heck of a lot. This was the last descending channel that broke to the upside, and then the ascending channel that broke to the downside, and I guess this is where we are now. We talked about the potential of another descending channel. Okay, so we broke above it and came back a little bit more. Remember last time it broke above it, it had a little bit more appetite and follow through before coming back in. So usually when you break, you want to see a gap and go. This kind of broke above it and just sitting above it. So I guess we'll use this 11204 as your area now. The longer it holds above that, maybe it builds another area for it to go off from. But again, all these moving averages are in front of it, so it's a little weaker. What can we get from the banks? Blah. I guess, what did it do here? Still hanging above this and still below all the moving averages, still below this intermediate trend line. So not much you could say there. What are the industrials doing? Hanging above the recent little thing there, XHB. You had a wide range bar and the rates going lower, and then it's already pulled into the top thirds. So this group has been broken. It's below the 200-day. It's below all this. So if you're playing bounces, they've been very short-lived. The only way this one could be a little bit more constructive, I guess, is if it, I don't even know if it's even worth looking, is if it holds above, I guess, today's low and goes sideways a little bit and shows some commitment to this wide range bar versus just negating it, which has happened many times. So let's talk about some stocks. Friday I got long Apple, thought maybe the descending channel would be a good spot to add, which was yesterday. Today it opened up, sold some strength. When it went negative, I got out of my stock. I kept my options, and I was looking to buy back somewhere around 95.60, and I just missed it. And at this point, I still think it looks fine. Okay, still short term though. You had a bit of a doji. Okay, so that's when it pushed through the prior day high and closed middle ground, still above the 8 and 21 day. I just think the market's not sure exactly what it wants to do. So if you had to be long something in this market right now, Apple is a candidate for it. Same guys who are bearish on technology are saying the same thing here with the head and shoulders format. But I don't really believe in that. But that's my opinion. So we'll see what happens here. If this does come back in or trades below today's low tomorrow, maybe it'll give that strength, a little bit more strength to that thesis. Because you do have this this trend and it's still below it, so it kind of got negated right there. But so the positive holding above the 50-day, above this, negative below this trend line, and maybe that happens there. I'm not so sure. So I'm going to hold some options. I still think the highs of the year are not in. I just don't know what's going to happen in the next week or so. So other things, look at social media. We talk about it every day. If you look at the charts just now on the close, they still look like a choppy mess, but holding higher. And if you try and trade or add on strength, you're on the virtual trade floor, you're probably just as frustrated. Twitter seemed as if, it had all the ingredients for at least some kind of power. That was the gap up after earnings. Came in today long. I started buying it also somewhere around this 44.40. And then when Facebook just got really weak, it got weak. And it's still fine. It's above all the moving averages, but you got a red candle here, closed about 80, 90 cents off the highs, and it's just not trading well. Facebook, you look at it now, is it still above the earnings pivot? Is it still above the 21-day? Yes. But it's just, this isn't trading well either. It's just monotonous crap. Sorry for my French. If you want it to be in it versus this, you're in it and just don't overtrade it. But for us, we try and be in it and try and add and think that we can get some momentum, and there's been none here. At some point when everyone's really tired of it, maybe it'll go, and that'll be the time when hopefully we stay with it versus saying, oh, this is horrendous, and meanwhile all it was doing was consolidating a huge move that we've been trading and maneuvering all the way down since here. So in perspective, look, I remember this whole range when everyone got all upset and mad and out of whack, and then it broke out. So anyway, we'll see. It's still up here. It still looks really good. It's still trending. It's away from this trend line. It's above the 21-day. But, I guess it's August, and some things just aren't having momentum. So as far as Tesla, all the reports, all the segments on CNBC about consumer reports, this and that. Meanwhile, Tesla closed positive. Look at that. So strong stocks, something to watch, something to be in. If you had to be in something, this is something you could be in also. Had every reason to go down and it didn't, so hopefully you're not a stubborn short here. If you're a stubborn short here, you're in trouble, I think. If you're looking to be long for a breakout above 265, it could happen soon. If you're jumping out of your skin and think it happens soon, maybe you're in some now, and then hopefully you get a trade, or we all get a trade through this price point versus happening overnight. We'll see, but closed very well. So that's something that still looks good. It's cousin right now because these two are moving together. not as tight, not as strong, but it did hold above the price point we talked about in the morning call, and it's developing some kind of flag. Came a little off the low, still above all the moving averages. So looks decent and could use a little bit more time. With more time, perhaps it gets meatier for a better move. Baidu, hanging in there. This was a decent trade yesterday for some, and it's still above the moving averages, above the gap, and just, again, it's August 12th, so there's just not a heck of a lot going on here, not a heck of a lot of buying on strength. Google's been out of play and looked like it was going to break its support. It didn't yet, so see what happens. Still have a lower pivot. This was the trend line since earnings that it broke, if you remember. Right here, that was the earnings day, so that was a signal momentum was leaving. Now the question is, will downside momentum happen? I'm not sure why this is weaker. The earnings were good. The valuation is still great on Google, but whatever. We'll see what happens here. This is key support now. Amazon tried to go a little bit and then came in and still looks, I guess, like at some point, perhaps if something comes out on it, maybe it tries to trade into this gap. It is holding above this 316. It's just not a lot going on there. You got to use your 5-minute charts, and you don't want to pay up one too many times because you could get hurt. And if you're just thinking short, just be a bit careful, because you know what goes on with Amazon if you stay too short for too long. If you can get paid sometimes, but there's a big gap right here. So we'll see what happens. Comes out with news every so often. ICPT, wow. Big gap up to close on the dead lows. That's something that I don't think you should be involved in. Some guys are, some guys aren't, whatever. On the 5-minute chart, there was one trade in there, but it was short-lived. Sperling caught it as soon as he came back. It was actually pretty funny. From the sell the news all the way down to here, then you had a brief $20 move back, and then once it broke this daily range, if you were in there, I would have gotten out of it. If you're in it for the longer term and you believe in it and this and that, that's your prerogative. For me, I don't think this is healthy action for something that came out with such good news. So I would avoid it, or maybe tomorrow it opens down, you get a red dog reversal, and you could use 274 as your pivot, and then whatever the low is from the session, blah, blah, blah. So stay tuned there. Be careful. Be very careful. What the IBBs do? IBB is still hanging around. Byron Wien actually was on TV today and said that he liked it, holding higher. So looks decent. I think someone said BIIB had a red dog reversal today, which it did. Still holding some of the gap. Here's a reversal. So if you're a fan of this company, maybe this is something to watch in the next day or so. And let's see what Guild is doing in this little spot. Oh, Guild looks pretty good. Really good. I drew this the other day. Closed strong. Closed right here. Perhaps, it gets on its way to that 100. It's above the 8-day, above the 21-day, showing relative strength. That's something that if you had to be long something, that's another candidate. So I guess in closing, you have things, if you had to be long and you have longer-term commitment, you could be long because they're acting well, they're just not trading well. If you trade all day long, you know what that means. As far as the market, we've had to move off the lows from Thursday night or Friday morning, and it seems as if we're hanging in there, creating a mid-level flag where it could take 1 day, 2 days, 3 days, 4 days for it to show commitment and then resolve to the upper area. So we'll have those levels, and you know what they are. Still a lot of geopolitical scenarios going on. I know those trucks are all in the Ukraine, and some thought it was a Trojan horse phenomenon that people are going to jump out and it's going to be a big coup. But I guess if that's not the case, maybe that'll help the market also. Also, people are very scared of the German GDP on Thursday because of their consumer confidence, but it's already been off 11-12% off the high, so maybe that'll give an opportunity to buy that area. I guess look at EWG. This was just, we talked about how it being such a feeble bounce. It's back in here. We'll see what happens. I guess the bears will growl if this area were to break, and that would coordinate with the DAX making new lows on the last few months. Look at the breakdown here. False breakout, gap down, retest, broke the 200-day, stayed below the 200-day, and extended. Lots of technical clues here that the DAX was breaking down, which gave us some clues that we were breaking down. But again, just because it's down 10-11% doesn't mean that we're going to be down 10-11%. We don't have as much exposure to Russia or psychology, whatever it is. Anyway, at this point, we have our points of reference. We know that you should be taking your money and running and not expecting a lot. If something does happen, treat it with an open mind as far as luck is when preparation meets opportunity, and there's not that much of it. August 12th, midsummer, when everyone's going away in the midst of some type of thin, erratic corrective phase, so don't do too much. And that's that. See you tomorrow morning. Have a great night.